Hello there, traders. Welcome. Good morning, good afternoon good late afternoon and evening to all, and welcome to today's Wednesday's midweek review through Bretton. And my name is Kenny Simon with you live on the 12th of October, 2022. Now, I do apologize for having a couple of minutes, I would say more than 10 or 15 minutes late today. We've just got some things to sort out in terms of my research and analysis as well for today, but I've got loads to update, and we'll get through to some very essential news, especially revolving the UK. So we've got lots of trading opportunities the whole week, and as we have actually mentioned, we were a little bit early in. We were a little bit early today in, not today, but the whole week as of last week, a week and a half ago, in alerting traders and investors about a crash in the housing market in the UK. Now, there's a lot of mess. As much as I can summarize it, I think the most accurate way is it's a building up of tension and fear and a lot of mess in the UK at this moment of time, with the new UK PM or Prime Minister as well, taking over a lot of mess. And I think it's going to be prolonged in terms of the financial market risk as well, that will actually go on and ripple effect the entire of euro as well, especially when euro has got loads of its own worries and tensions with Ukraine and Russia still going on or getting on to each other as well as we speak. So there's still, the war is still going on. I mean, a battalion of soldiers have actually been sent, about 2,000 or so last 2-3 weeks ago, and there are more actually going to be deployed as well. So that is a very big sign that the war is not stopping between Russia and Ukraine, and that has a big impact with oil as well, oil and gas excuse me, oil and gas supply in the UK, oil and gas supply in the whole of Europe especially. That is where the whole tension arises. So we're also seeing oil in barrels has actually been cut by OPEC, and that basically rises the demand. And because of the lack of supply, that would actually only have got more impact with the rising price of oil and gas. And this is where we are at this moment of time. Now, sentiments in terms of or feelings and thoughts by traders and investors are biased, were actually biased to the risk on environment as of earlier today, and I would say late last night, but things have actually changed to a risk off environment. We are seeing more buying now of JPY or Japanese yen was actually on a selling spree as of last night. So it was more a risk on environment. People are having more appetite into the risky assets, but then things have actually changed as of London Open, as of just now as well. And we're seeing rising interest in buying the JPY, which is a Japanese yen, and the CHF as well, which are both safe havens. So when we have got lots of buying going on with safe havens like the Japanese yen, the Swiss franc especially, and also gold, then we have got a risk off environment, meaning that traders and investors would actually prefer to put their money into safe havens or less risky assets. Okay, so this is what's been happening, and I would like to share. As you can see behind me, we have got the heat map going on, and nowadays, for those who have actually just joined us today and for the first time as well, it has actually changed the whole the whole trade plan scenario, whereby we are having all the tools, relevant tools for all the traders out there on a special dashboard called 10 Academy, not 10.com, but 10, the letter 10, TEN, Academy, and this is how the dashboard looks like, and this is where we are all going to be doing our analysis, both fundamental and technical analysis, in one place. And this is a dashboard that allows you to assess all the various tools, news, economic calendar, heat map, stop movers, various other things that I have actually been using for the past 10 over years to actually consolidate everything, amalgamate all the tools and my analysis onto one place, which is the Academy. So by this way, you will actually save a lot of time skimming through other websites as well. And I'll be doing all my analysis live in front of all of you using this dashboard as well. So we've got a heat map here that gives us a bit of a bird's eye view in terms of trend. You start off with the currency to the left. You're looking for a row of not horizontally, but then we're talking about horizontally, not vertically, but horizontally first. Starting with currencies on the left. Now, when you start with currencies on the left, you're looking at all these bright red, a row of bright red or a row of bright green. Bright green, not bright, but I would say highlighted green right here. And this, if you've got a row, that actually means that, you know, it's quite steady for that currency to actually be either bullish if it is green or bearish if it is red across the board and compared to all the other currencies. So, for example, let's take a look at GBP. Let's take a look at the USD crosses, GBP crosses, and Euro crosses for today. And then we'll take a look at gold as well, because I want to dive in straight into trading opportunities, because as we see that we have got loads of selling going on, a lot of blinking red with the JPY, Japanese yen as of now. But when we are using tools, what I would remind most traders and investors is that it's not a trading decision once we have actually landed on certain tools. Let's say we've got these tools, heat map and top movers, economic calendar. All this is just a means of understanding the sentiments of the market and then the trend overall, and then to pick out the right pair. And once you've done that, we need to then enter into trend analysis once we have picked the right pair, and only then we do a technical analysis. So this is the whole PRICE trade plan that I'll be going through with you, incorporating all the tools and everything that you need, both on fundamental and technical, all in one place on Academy. Okay, so this will make it really easy for most of the traders and investors out there to be able to understand how do you actually combine technical and fundamental, but then we go on to a step-by-step approach, a sequence of steps to research and analyze the market first before jumping straight into technical analysis, which most of the newbies and beginners, or those who are not consistent in their trading, this is what they have actually been doing. And a lot of my research also involves on how do we actually encourage traders to follow a step-by-step procedure or standard operating procedure, which we call it a trade plan. So if you don't have a trade plan, or if you straight away jump into technical analysis and you start drawing lines and you look at price action, or you apply technical indicators, what that means is you probably overweighted on one end of the spectrum, which is, heavily relying on technical analysis or everything technical. And what that would do is to miss out on picking the right pair and understanding the sentiments and the trends of the market, because that should actually be the base in then picking up the right pair. And once you pick the right pair, right instruments, asset classes to trade, only then you do a trend analysis personally onto the chart. So in my years of trading, over 15 years, the last 10 to 13 years, I've not jumped straight onto technical analysis or look at the chart at all. As you can see, we are looking at heat maps, we're looking at top movers as well, and various other tools out there in order for us to actually understand where we are at in terms of sentiments of the market. The feelings of the market amongst traders and investors are very, very crucial. So talking about sentiments now, at this moment of time, we've got building up fear. We've got three basic emotions in the market, right? We've got fear, we've got greed, we've also got uncertainty. So these three predominant feelings or sentiments, we call it, are also driving the direction of the market. So if you've got greed revolving in the market, that would actually drive the market into a risk-on environment, meaning more and more greed, more and more buying, and then the market goes up and up and up. And then we have got retail traders wondering whether or not it's overbought or not, things like that. So that is when we have got greed in the market. Now, when we have got uncertainty, it's exactly like how things are at this moment of time as well. Before a particular economic data release or before a vote, let's say voting has actually gone on for a presidential election, so things are not certain what the result would be, then the market would go sideways, and that's called a uncertain, not sure type market. So traders and investors are not actually participating as much into the trading. So when they're not participating into the trading, market goes sideways. The longer it goes to a sideways type movement, then it is said to be not only building up of uncertainty, but then building up like a pressure cooker type environment to extend a good breakout. The breakout will be more powerful to the upside or downside the longer the sideways market carries on. So that's your uncertain type sentiments or feelings of the market. That is when it goes sideways. Now, usually when you are in doubt of the trend, it's probably best to stay out of the market. Now, if you are a skillful trader, have got some proven techniques and skills in range trading. So if you've got a range trading type methodology or technique or skills, then you are most welcome to actually trade it that way that you're familiar, especially if it has actually given you results. Everything boils down to the results, right? Everything boils down to the consistency of your performance in trade. Now, there is my concern is never on what you are applying. My concern is looking at whether or not you have gained skills from combining both technical and fundamentals, because the problem with the market at this moment of time, it's very uncertain, and it's got the application of complexity theory, which basically means that anything can happen at any moment of time, and it doesn't actually follow through a standard operating procedure by governments or economic. Anything can happen at any moment of time. So it's most of the time the big boys, the hedge funds, the banks, governments, especially central banks, they have their own plan of doing things to balance their books in their, to their benefit, and basically to the advantage of what they want to be producing in terms of results. So with that, it is really difficult for us to just predict the market based on their plans that they say it to us through media, for example, the mainstream media. Whatever that goes on in media has actually been, it's just goes over and over repetitively, and then it comes up with more like market gossip and market noise, increasing volatility, increasing fear, or increasing greed, or uncertainty as well. So this is what we would like, is to understand that there's volatility, of course, created by an event, but then it is our responsibility, our individual responsibility, to then conduct a trend analysis individually in order for us to understand that that is the trade that I would wish to take at this moment of time. So I would like to do a trend analysis at this moment of time, and this is what applies to you personally. And this is how we would like to share with you the way that we think of the market, and the way we think before and after or during trade. So the mindset change would actually be very, very essential in approaching the market in terms of researching and analyzing the market. Okay. Now, enough of all that. I think probably best for us to get straight into some pairs straight away from our research in the Bretton research department. We've already skimmed through the news, skimmed through all the happenings in the market, expectations as well. And as of today, what we have actually seen is we've got this building up uncertainty together with fear in the UK. Now, we've got similarly, that's been going on as well, up and downs in the Eurozone, and we have got building inflation in the US. So USD crosses are good to monitor and do a trend analysis for, together with GBP crosses and Euro crosses. So I would pay a lot of focus onto major currency pairs, major pairs. Major pairs are all the currency pairs that have got US dollar in it. So anything that's with USD, GBP USD, Euro USD, USD JPY, CHF, USD CHF, Australian dollar versus the USD, as well as New Zealand dollar versus the USD. So when we talk about antipodian, or when we mention the word antipodian currencies, this would then be relating to both Australian dollar and the New Zealand dollar. Now it's got loads of movement. It's been moving crazily as well. Australian dollar crosses together with the New Zealand dollar crosses. So let's take a look at the heat map once again, and let us look at row by row, and we'll start off with all these currencies on the left. Now, what we would like to look at is, as you can see behind me, you could actually then see that we have got sort of a straight row, and most of the boxes are filled in with green, highlighted green for GBP. So we've got GBP right here. So what that means is GBP overall has actually been moving to the upside as of now. For example, now it does not mean that that is the trend. Okay, so we've got British pound right here. We could see a couple of things right here as well. We've got sort of like a dashboard giving you this whole selling type pressure that is going on, driven by or fueled by fundamentals. So overall, fundamentally, it's not looking good in the UK. So overall, the trend or the bias is to the downside. But what's going on right now could actually be a correction. So there's a build up of, there's a build up of upward movement. Now, that does not mean that it is on an uptrend. So when we want to look at uptrend or downtrend, we need to talk about an overall medium, short, medium, and long term. But when we look at the heat map, it could actually be for now. So at this moment of time, we've got a bit of a build up of GBP versus most of the other pairs. Now, if the overall trend is to the downside, and now for now it is actually going up, that basically means that it's just possibly a correction, not a change of trend. So a lot of traders would actually ask me, should I actually enter into a buy because it's going up? Well, it's going up for now, but the overall trend, fueled by fundamental, it's more powerful than the current movement and the current candle, current price. Current candle, current price, and how it's moving for now in short or medium time frame could possibly be only a correction. Okay, it's not a trading opportunity for me, as I am a trend trader, and I'm actually passing on or sharing some skills and techniques and strategies, more leaning towards a trend type trading strategy. The main reason is because I'm a price patterned type trader and not a scalper as well. So I basically rely on trend to feed more quality data into the price pattern. So price pattern is a trend trading strategy. Okay, so it's that's why most of the traders would then see that if it is a correction, we'll just wait for the correction to occur, but it is the overall trend from short, medium to long term that I'll be trading and sharing the trade idea or signals with you. Okay, so we are looking at building up of upward type movement or bullishness at this moment of time with the GBP. So whether or not we are entering a buy or a sell for GBP would actually be dependent on the overall trend. So I am looking at selling opportunities for GBP, even though for now it is actually on the upside. That would actually be giving me more information of how much it would actually be correcting itself, reversing before it comes back to the overall trend, and only then I will be participating in the trade. Okay, so usually I'll give you a bit of an idea of price pattern as well. So we will get onto the chart and I'll draw some patterns so that you'll get a better idea. So for example, with GBP, the overall trend fueled by fundamental is to the downside. So from 3 to 4 consecutive time frame, we've done a research and look at the possibility has actually arisen for GBP to fall even more, both from fundamental as well as technical. So in my personal opinion or strategy or plan of action would actually be only to participate in the selling of GBP. So I would also ignore opportunities on buying because the overall trend is to the downside. So I'll only participate as a seller to actually sell the GBP. This is what a trend trader would actually do, right? So with that, I'm not saying that you guys who have got the skills and strategies to trade anti the trend could actually easily do it as well. You can actually apply techniques and strategies like the psychological numbers, looking at candles as well, opening price, closing price, various other things, and apply that onto your approach of how you want to. So I'm not saying that, you know, if the trend is down, you cannot trade to the upside or trade in the corrective move or trade the reversal. Of course, it's entirely up to yourself on how you want to trade and whichever direction that you would like to trade. The most important thing is whether or not you have got a trade plan. Now, if you've got a trade plan, then you would understand the sentiments, you understand the trend, and then you can do whichever that you wish on participating into that trade, whether it's on the upside, downside in terms of trend, or reversal scenarios as well. So, or even range trading. So it does not matter. You know, that's why the entry is not as important as the exit. The exit is super important, mainly because, you know, you can choose whichever direction that you would like to enter, but whether you exit with a profit, because the exit determines the profit or the loss. Okay. All right. There you go. So let's take a look at GBP. It's building up to the upside. Now it could be reversal at this moment of time, but this is what they're doing. So we'll do a personal trend analysis right now. Okay, so let's jump into GBP and I'll share with you on trend analysis as of now. And once you are familiar, and we are all familiar with what is going on in terms of the trend on multiple time frame, only then we'll get into technical analysis and planning the trade, if at all the trend is smooth and strong. So let's take a look at GBP USD on multiple time frame. You could start off with a 15 minutes, 30 minutes, it does not matter. When you do a trend analysis as opposed to a technical analysis, you need to choose the time frame in accordance to your capitalization, in accordance with your funds availability, your equity as well. I'll explain that more into our videos, okay? We've got a range of videos on special topics, video tutorials on that will actually be posted and inserted into the 10 Academy's dashboard. So with that, you can then refer to it at any moment of time by topic. For example, whether it's Fibonacci, psychological numbers, let's say applying the EMAs as well, everything that we are talking about, and it could actually come into a sort of a tutorial type format for you by topic. Okay, so we'll work on that. I'm working on that at this moment of time. Now let's do a bit of a trend analysis for GBP USD. Now, once we are about to conduct your trend analysis, one of the most important things are the 3 lines. You would need your 3 lines, your 3 EMAs applied at every time for all instruments, whether they're cryptocurrencies, oil, Brent or UK oil, commodities, precious metal, stocks and indices, or anything, any instruments at all. When you want to do a trend analysis, you could easily apply the 3 EMAs. Now, it comes under moving average, and then the method, you need to change it into exponential moving average. That's why it's abbreviated to EMA or EMA. EMA stands for exponential moving average. Now, there are 3 types or 3 parameters. You've got the 50 EMA, the 100, and the 200 EMA. Okay, so 3 EMAs running like river, right, like this, and we'll start off with a 30-minute chart, let's say. What I would like to look at is whether or not, if, for example, fundamentally, GBP and GBP crosses are said to be on a downtrend, and then we have got more news and fundamentals fueling the downward movement, and the trend and the momentum is picking up to the downside, then I would like to see that the 3 lines would actually go down very smoothly, not touching each other as well. So we also want the current candles, majority of candles needs to be trading under all the 3 lines, not touching any one of the lines. Now, we have got the price at this moment of time and current candles in between all the 3 lines. The 3 lines are pointing downwards, which is great, but we've got a bit of an uncertainty because the candles are not under all the 3 lines. Because it's not under all the 3 lines, there's a bit of an uncertainty going on. It's not clear downtrend at this moment of time when it comes to the 30-minute chart. So then we need to proceed and go one step up to a different time frame every time, and then to gather more and more data to understand whether or not the 3 lines maintain the same to the downside or not, or whether or not the cluster of candles and current price is way under the 3 lines, and the 3 lines shouldn't be actually touching or entangled to one another. Now, we've also got the price at this moment of time. We need to practice looking right and looking left as though you are crossing a very busy highway. When you're actually looking to the right side, you're looking at the current price, and then you are marking in your mind where are the closest psychological number above the current price and under the current price. So I'll just give you a little bit of a hint. Now, it all comes to practice as well. When we look at the current price, which is this very thin white line horizontally moving, and it's actually moving pip by pip up or down, and you can see it moving because it's a very active market today. And we could actually see that it's trading, GBP USD is trading at 1.1041, 40 and roughly like that. But as it goes upwards, now the 1.1041 will meet the 1.1050 psychological number. So 1.1050 is at the very top as a closest psychological level where reversal could happen as well. But if it goes beyond that level, then we've got more building uptrend. But at this moment of time, on the 1 hour chart, it does look like we have got a little bit of a struggle of bias to go up. Why? Because we've got the wick. As you guys can see, we've got the wick at the very top. Now, if you've got a wick or the needle-like feature line upwards, getting longer and longer, that basically means that it's weaker for buyers to go upwards. So the buyers are exhausted to the upside. Now, that is a sign right here that the building up of sellers would actually pull down the price for GBP USD. Now, this is just visually itself, right? So now what is best for us to do is to always mark 2 levels based on psychological numbers. Now, at the very top, we have got the 1.1050 psychological number for us to mark it there. So we then will understand where is the current price. The current price will always be tracked between the 2 closest psychological level in order for us to gauge where could it actually break out from to go towards which direction. If it breaks out above the top psychological level, then we have got interest coming from buyers to push the price upwards. Now, and vice versa, if it is actually, going to be breaking out to the downside under the line below, then it is more towards a bias to the downside. Okay, now let's go on to marking these lines. Now I've got the first line at the top psychological level, 1.1050, as you can see, the blue one. I'll change the color to red just so that it's a little bit more prominent and clear. So we have got 1.1050. Now, as it falls, it would actually be reaching the 1.1020 psychological number. Okay, so then I'll just mark it there, 1.1020. Okay, there you go. Right now, so we've got these two levels now. Now, current price is really close to 1.1050. It's trying to, trick traders as well, that it is about to go up. But the thing is that, visually, we need to look at the wick as well. But also, what's important is to compare it to the 4-hour chart as well and look at what it's doing. Now, when we are looking at it from a 4-hour perspective, the 3 lines suddenly has got a sideways type movement, but the candles are under that 3 lines now, or these 3 lines. Now, what that means is that we have got a bit of an uncertainty of which direction the market would actually be going. So it's taking a bit of a pause at this moment of time. It's not sure. Market or the majority of traders investors, they are in doubt at the moment on which direction to take the market towards to. It's not up, it's not down. They're resting at the moment. They're holding off a little bit, taking a bit of a breather. So when they are in doubt, you as a trader needs to stay out as well. If not, it'll be like putting your finger into a spinning washing machine. That is basically how it would feel like if you are actually going to trade or rushing yourself into a trade at this moment of time. Now, at this moment of time, looking at how the 3 lines are actually moving, which are sideways at this moment of time, and we have got not really clear movement of candles. We've got the bullish candle at this moment of time as well, building up, and it's really close to the 1.1050 psychological number as well. So with that, it's just not a good timing wise to actually trade the GBP USD at this moment of time. But as I see it, and as you guys can see it as well, guys and girls, you can actually you would notice that it's on the daily chart. Now we're on a daily chart. It's definitely more biased to the downside. We've got these little steps to the downside. Very nice, smooth 3 lines trading towards the floor. Candles and cluster of current candles as well as the current price are all very nicely down below under all the 3 lines. So this means that anytime from 4 hours time to 24 hours, that kind of time frame, we may expect further building up of a downtrend. Not now, not in 1 hour to 4 hours, not 4 hours to 24 hours. Within the 4 to 24 hours, yes, but within the 1 to 4 hours time from now, not just yet. It might actually need time to build up. Perhaps it's waiting for more participation from the US Open, which is still too early as well, and also the European session in the afternoon to actually pick up on various other trades as well. And then it would probably be giving more momentum and volatility, which is the lifeblood of the Forex market especially. Okay. All right. Now, I hope you guys are getting more clarity at this moment of time. Now here, what we can do is I would like to introduce you guys to 2 other indicators that I use. I don't use very many indicators. Mostly it's the moving average, the stochastic, as well as the ADX. Now, ADX stands for the average directional movement index. Now, these are the only 3 indicators that I actually use. The moving averages, as you can see, the 3 lines, it's considered as one indicator under moving average. But then I use the exponential moving averages, and then I've got the stochastics as well as the ADX. Now, let me explain what I use these indicators for. For the moving averages, we are using it only not to enter the market, exit the market, but only to identify or understand the trend across various time frames. That's all. It's a trend indicator, so it's probably best used to give you an indication of what the trend is across multiple time frames. So we have an overall picture of the trend from a short, medium to long-term perspective. That's what the moving averages, exponential moving averages, or the three lines that I apply all the time are for. Okay, so that's your moving average. Now, for the ADX, average directional movement index, you can actually find that indicator under indicators. It's a trend indicator as well. And when you go onto the trend tab, you'll find it as average directional movement index, or abbreviated to ADX, known as the ADX. Now, the ADX allows us to understand how strong the trend is. Now, when you click onto the average directional movement index, you just need to do one thing. You need to go onto the level section right here, and you click on add, and you type the number 25. So you have the level 25. All the rest, you don't need to do anything else, right? Leave it as default, a default setting as it is. So you need to only add the level 25. Now, what does this do is we will have an indicator that looks like this below, as you guys can see. We want to only focus on the blue line. If the blue line is above the level 25, whatever trend that you're looking at will be strong, okay? Or not will be strong, sorry, mind my language on that, would most probably signal strength in that current trend. So the trend overall is a downtrend, because we see that on the daily chart as well. And then the level is above 25, but not the way the blue line moves. It should actually be upwards. Let me just give you a little bit of a hint on how it should actually be. Okay, let's say on the weekly chart, it's a very clear downtrend, a very strong downtrend if you follow the ADX. Why? Because we have got the blue line above 25. It's moving, you know, really high up above the level 25 and very clear. So that means a downtrend is very strong. So it doesn't matter, whatever trend that you're looking at will only be strong, whether it's a downtrend or an uptrend will be expected to be strong, or it has a strong movement of the trend that is clear as well, if the blue line or the ADX line here, blue one, is above the level 25. So on the weekly chart, the downtrend is strong because the ADX line is above 25. Okay, now the daily chart, it's a downtrend again, but it looks like it's still slightly above 25, the line, but the line is going downwards. Okay, it has to be above and pointing towards the sky. Then you have got a strong downtrend, because now it is downtrend for GBP USD, or bias to the downside, because fueled by fundamental to the downside. Technically, it's looking like all the three lines downwards as well. Candles are under all the three lines. So on the daily chart as well, we would say that it's downtrend, which is quite clear, but the strength of the downtrend is not there yet. Okay, so it's not there yet. But then the weekly chart, that means on the long term, we are looking at the possibility of more and more fall of the GBP USD. So with that, what we need to do is apply a second indicator called the stochastic to look at whether or not we have divergence. Now, stochastic that I use is, not to indicate to be overbought, oversold, because I don't believe in overbought and oversold. As you guys have been demonstrated last week, I think last week where we were talking about certain pairs, and there were comments from traders talking about overbought and oversold, and then it was one of the pair that was said to be overbought or oversold, but then it moved to that direction even more. Okay, so we have got the least attention should be paid towards overbought and oversold, especially when with stochastic I use divergence, and it's quite, I would say it's reasonably accurate. It's still a lagging indicator, but it gives us a little bit of a hint of whether or not there is a reversal. So this is what I use my stochastic for divergence for spotting divergence. Divergence means that something is opposite. There is a divergence. If something is going hand in hand, that means we have a convergence. So we don't have a convergence. If we have a divergence, that means the market is about to reverse. There is a reversal expected. So now we are on a downtrend on, let's say, the daily chart, right? The daily chart is giving us very clear downtrend for GBP USD. Now, I'll apply the, let me check. I'll apply the stochastic as of now to look at whether or not we have a divergence. And I explained how we actually do that. Whether or not we're expecting, because there's a downtrend at this moment of time. A reversal means an uptrend reverse movement to the upside. So whether or not we're expecting a reversal. Now, as you guys know, we have already marked the 2 psychological level as well. You can see that the price is now in the middle of both psychological level. It needs to break out of these two, either one of these two horizontal rate line, then it'll give us a better hint of which direction it wants to go. Now, overall, it's a downtrend, as I've mentioned. You can see the lines as well, and this is on a daily chart. So will the market reverse? Is there a possibility or probability for the market to reverse? And how we do that is by applying the stochastic. So I'll apply the stochastic right here. It's under the category of indicators called oscillators. Now, we click on stochastic. We don't change any parameter. It's not necessary. And we just look at whether or not there is a divergence. We look at the highs and the lows. We've got a high here, we've got a high here. That high is this high here on the stochastic. That high there is here. Now, from high to high, we have got on the chart itself, we have got candlesticks doing a lower high, right? So we've got a high here, but then a lower high. Then on the stochastic, between these two peaks, we can see that it's a higher high, not a lower high. So that means it's opposite. Between the lines on the stochastic and the candlestick chart, we have got a divergence, an opposite thing going on. So let me draw from high to high. So we've got a high. This is a lower high, very easy to spot. I'll just make that a little thicker right there. So you guys can see that it's a downward slope connecting one peak to the other peak. So a high to a lower high, then you've got a lower slope. So then we do the same from this high to that high, and this is a higher high movement. So that gives us a higher slope. So you can see from the slopes itself, we have got a divergence. One is a down slope on the chart, the other one is an up slope. So it doesn't match. That's a divergence. Okay. So if we've got a divergence, that basically means we have got a potential reversal. That is on the high side. You can also measure on the downside. We've got the lows right here. This is a higher low. From the low right here to the current price, it's an upward slope because of a higher low. Now here, for example, to reflect that here, oops. Okay. We have got a sort of same level lows right here, right? Okay. And that is a divergence as well because it doesn't mirror between that higher low, whereby it's an upward slope, and this one here is a flat slope. So again, divergence on two counts, the highs as well as the lows on both between the chart and the stochastic. So here, for example, it's a downtrend overall. We've seen that for GBP USD, but right now we're expecting an upward movement mainly because of the divergence. Now that also matches with what we have just seen on the heat map. On the heat map, across the board, we have seen that it is building up in the momentum to the upside. So now we are expecting an upward type movement. All right, only now we could actually then look into conducting a technical analysis to plan our trades ahead for GBP USD. So let's just focus on GBP USD at this moment of time. Now, we are looking at the daily chart. We have got, you could look at the 4-hour, the daily as well. You know, it really does not matter. It does actually depend on the videos that I've actually got it ready to help you understand what sort of time frame you could do a technical analysis on, depending on your equity or your trading capital. Okay, this is really important because it makes no sense, or it would actually just be off risk to you. If you've got $100 or $50, you would like to test out the market into your broker, deposit $50 or $100, and then you want to start off with technical analysis on a daily chart or a 4-hour chart, you'll just simply wipe out the market or wipe out your account straight away, almost. Okay, so there are ways to actually do that. It'll be explained in the videos on 10 Academy's video tutorials that I have on separate topics. So each topic would actually be categorized, whether under technical analysis, under price action, under fundamental analysis, under the MT4 or MT5 platform of 10 trade, for example, and various other categories. So you would have different big topics or categories of topic, and under it you've got the subtopics that comes under that big giant topic itself. Okay, so under fundamental, we've got how to use the economic calendar comes under fundamental. Act of God events, how would it actually be of impact to the market, and how do you actually trade it safely? That comes under fundamental. Then you've got the Bollinger Band, Fibonacci, tools, retracement, extension, that will all come under technical analysis, or better still, under technical indicators. Under technical analysis, then you've got your price action as well with that, or maybe separately, price action would have only price action techniques. Also, price pattern would come under price action. Psychological number would also come under price action, as we use psychological numbers for entries and exit of the market. Then you've got price patterns as well. So we've got various, so that you are then familiar and knowing where to actually click onto which giant or big topic to look for the subtopic that you actually want. And they will all be arranged or organized in a manner where you would also get all these videos not extending more than 5 minutes, anywhere between 3 to 5 minutes. 5 minutes would be max, so that you guys can actually do your self-learning properly, self-paced learning online with all these topics, and then apply it basically onto live market with me during the live webinar. So that's the plan of action that we have for you. Okay. All right. Now, let's take a look and do a little bit of technical analysis, price action as well, drawing lines and various other things. So you guys can see that all these things are only meant to be done at the very end to help you decide on step 5, which stands for execution of the trade. But you need to do the P, the R, the I, the C, and the E. You would also need to do the risk and money management side of it by applying the simple formula of understanding what lot size you are going to be using for this particular trade. Let's say we're interested in GBP USD. Trend is not that clear yet, but there may be a potential for us to look at clearer trend, moving forward. Now, with this of what's going on at this moment of time with GBP USD, if we are looking at the daily chart, and we are also, let's say we visit the weekly chart as well, it does actually give us a better hint of the clarity of a downtrend from medium to long term onwards. So not just now. Now, probably we're expecting a bit of a reversal. So for those of you who got really excited, overexcited with the selling, it is time for you to just lay low a little bit, get less excited, and get out of the market first and monitor the market a little bit more, mainly because a reversal is coming very, very soon, or probably already started to reverse. Now, if we look at the 30-minute charts, let's say, we already have got that whole movement of an upward type candle on the 30 minutes chart right there. It's moving, in between the two psychological levels. So we need price to go above 1.1050, like 1.1060 onwards, to actually have an ideal buy price if you want to trade anti the trend. Okay, you want to trade the reversal because overall it's a downtrend, but there is a potential for it to actually reverse. Now, if it does actually reverse on the 1 hour chart, it's got a bit of a limit of where it would actually reverse towards to. That means it might actually go upwards. Let's say if it does actually break out from 1050, let's say 1060 or so, then it could most probably be aiming at the 1080 psychological level. So whatever you do when you trade, it's probably best to exit at 1070, 1.1070, if at all you are trading to the buy side. But for me personally, I'm a trend trader, so I'll be looking at only a breakout to the downside under 1.1020 and below. Then I could see that there are some support and take profit areas that I would actually be taking when it occurs. Right now, it's a little bit too early to decide all that, mainly because trend is not clear, hasn't broken out from the two psychological levels as yet, and it's not giving me a solid decision to take for GBP USD, whether it's the buy, whether it's the sell. But the best decision to take is to actually stay out of the market, because I'm in doubt at the moment of the current trend sentiments as well as the strength of the trend at this moment in time. So I'm staying out, but I've got a plan of leaning towards a downside type movement only after it has actually broken out of 1.1020 and below. So my ideal entry price for a sell, not talking of a buy because I'm a trend trader, I would only look at selling at 1.1010. So that would be an ideal selling price for me at 1.1010, but I need to wait for that price to get there first. So if I cannot wait and I would like to still trade the GBP USD, let's say I've got plans to go out, I cannot monitor my computer, I'll be in my car, or I'll be traveling, or I'll be working like you guys as well, will be busy, and you have got a rough idea of what you could actually be doing trading the GBP USD according to the trend, then you can easily do a pending order. You can click onto the new order section right there. Under the type, you click on pending order. Pending order will help you a great deal in planning your trade, even if you've got no time. It'll automatically execute, take profit, or you can set up your stop loss, entry price, take profit, everything in this receipt-like feature right here. So you just make sure that you've got the right pair that you are trading. Make sure the type of your order is your pending order, okay? And then you can then click on to, let's say I want to sell, I just make it simple and go for the sell stop right there. I want to sell only at 1.1010. So what I do is that the price I would like to sell at is 1.1010. I just type that one there, and I want to look at where I could actually be taking profit as well. So where I could be taking profit at is, this is the 1 hour chart. I think as low as the 1.0990 area, let's say. Okay, so I've got about, let's say 20-30 pips right there. Now I'll just type that on the take profit as well, and I type that there at 1.0990, let's say, as an example. This is a pending order. Then my stop loss would actually be, upon entering at let's say 1030 as well. So if you've got a 20 or 30 pips potential, then I would keep it simple in a 1-to-1 risk reward ratio type for the SL. So it whatever amount from entry to take profit in terms of pips, let's say 30 pips, then that 30 pips would also be for the SL. Okay, so let's say my stop loss right here, I would like to stretch it a little bit because of the volatility of the market. Let's say this is entirely up to yourself. Okay, so it's a personal money managing and risk managing type decision that you need to actually make. So I will then look at 1.1040 or 1.1060. Let's say much more, just in case. 60 right there doesn't really allow me to place the order right there. Pending, take profit right there. I think it's because of the price. So 1039, 1010, no, 100990. So because of the market movement, probably it's not allowing me. Mainly, it's got to do with my account, not. It's more on the technical side of it, but doesn't matter. So that's how you do your pending order. I'll just go for market execution. Let's say. Let me just try again here. Pending 1.100. It's not doing it again. 1.1010. Let's start off with the market execution first. Volume, take profit. It's probably my account. It's got some issues there, but that's basically how you do your pending order. I'll just get it sorted, and then I'll be able to place orders and send you guys screenshots in the groups as well, so you can actually look at that. So this is what's happening for GBP USD. This is on the 1 hour chart. If you're looking at the daily chart right here, it gives you more data. It gives you, it's telling us very clearly that whatever the price is now, currently, it's trading in a very bearish zone, mainly because we have got the bearish mother candle right here. See, so you've got a bearish mother candle right there. That is the area of the bearish mother candle. I'll highlight that, fill up the color. Okay, there you go. So this is an area of resistance, an area of the bearishness, basically. So it's in trade. It's trading within a bearish zone. So what I would say, what I would guess is there may be a potential, if at all it is going downwards on the bearish side in within that zone, to actually come and find support at 1.08 80 area, mainly because of this opening price of this mother candle right here for the bullish candle inside this box could actually be a support area. So if we were selling at 1.0970, let's say, it's not much of a pip that we can actually take, because we've got a very strong support at 1.0880, 1.0878 basically, or 79, which is only 1 pip away from the 80 psychological level. Okay, so that's for GBP at this moment of time, just to lay low a little bit with it. But I've also given in the group selling opportunities, and I think it's probably best to wait until price go under 1.0880. So 1.0870, as I've already given selling areas, selling ideal prices in the group, and that's basically in my various groups, whether it's WhatsApp or Telegram. And you can see that we've got all the selling signals already given out to you guys to actually sell the GBP USD. Okay, without further ado, because I would like to end the session quite soon, it's to go on to gold and then look at what's going on with gold at this moment of time. Now, if you guys have got questions, it's probably the best time to ask. You guys can ask questions at any moment of time, but now it's probably more crucial to ask questions. Any questions at all, guys? No questions. Okay. So now looking at gold, we are seeing a bias to the downside with the way the 3 lines are actually moving, especially on the daily chart. On the 4-hour chart, let's look at it. It's a little bit on the sideways. Of course, candles are under all the 3 lines, but it's not clear in terms of trend on the 4-hour chart. On the 1-hour chart, let's look at it. It's sort of the same thing, especially we have got the intertwining or entanglement of the one of the lines with the other, especially on the EMAs, and it's not really that clear. Now, I would like to point out something on the 1-hour chart though. We are trading at the moment with gold at 1669 or 1670 area, right? 1670 dollars per ounce. Okay, that is for gold, and we are trading at this moment of time in a very crucial support area, supported by the opening price of a significantly large visually mother candle, bullish mother candle, as you guys can see right here. So what I would like to do is to alert traders of this support area at 1668 or 1669 area. So let me just highlight these area in blue to mark it as a support level, a potential support level. This is on the 1 hour chart. As I move downwards a little bit, I've got a second opening price of a mother candle, another significant support. Now, this is only on the 1 hour chart. So I've got two lines now, 1669. Basically, let's make that 1670, 1668 to 1670 area as significant support. So once price does actually shoot upwards, there is a bit of a threat of prices coming down again, especially because we have got some reversal zones. Now I'll mark that reversal zones for you. This is for gold once again, and this is at 1677 area, right? So, and another area to really look at is this closing price of this mother candle right here at 1678. So 1676 to 1678 could also be a short-lived upside, if at all price of gold were to go upwards. We need to monitor and look at whether or not it would actually reverse at either one of these lines at 1676. So what I'm trying to say as well is you do have a little bit of buying opportunity once it actually is going up at this moment of time, but not a very clear, nice buying opportunity because you have got it short-lived, for example, based on these two lines. So these two lines could easily be what would actually bring the price of gold down again. This is based on the 1 hour chart. If we go on to the 4 hour chart, we could see that trend is just uncertain at this moment of time. So I would, as personally, hold off my gold trade until US Open later on, and then we'll look at what's going on for the week and for the rest of the day today. But at this moment of time, it's just simply very, very risky as well. If price were to actually come down a little bit more, even on the 4 hour chart, we still have got some support here as well. Opening price of this mother candle that you can actually see on the left as well. So hence the reason it is communicated by the three lines as well of not having a very clear trend. So I will mark even this area right here. Okay, so in other words, if we were to participate in more selling of gold, or we want to sell gold mainly because of more downtrend, I would think that the trend becomes even stronger to the downside only after breaking out from 1660. Okay, so it's still got some time to go. Price is quite high right now, 1669 or 1670 area. If at all it's going to give us selling opportunity, it needs to go down more and break out from 1660. So anything under 1660, then it gives me more confidence to enter gold straight with the sell. Now with the buy, we may have a little bit of a corrective move of gold going up, but it's going to be very unpredictable and very short-lived movement to the upside because we've just got loads of resistant areas and zones at this moment of time. Now, when we look at the daily chart, it's quite clear, smooth, and strong as well for the gold to go towards the floor, downward movement or bearishness. So bearishness would actually be more of a, what do you call it? I would favor the downside more than the upside for gold. Okay, so there we go. We've got more downside type pressure, especially for medium to long term for gold. And this moment of time, if we want to buy, there's a very little window for the buy, but we have to exit at 1678 area before it reaches 1678. Okay, I hope that's clear, guys. I would like to end the session as well. If you guys have got no questions, if you guys have got questions, fire away on your questions. Okay. No questions at all. All right. That's basically it that I've got for you guys for today. If you guys have got no questions at all. And with that, I would like to thank you for attending my midweek review by Bretton, through Bretton by myself, and in collaboration with esteemed.trade as well as esteemed.academy. Okay, with that, once again, thank you very much, and we'll see you guys on